Hello and welcome to this week's HealthTech Hour with me, Steve Roest. Each week we bring you the best news, views and interviews with the leaders, clinicians, CEOs and founders in the health technology space, the people that are driving the health tech revolution forward in the UK and beyond. I am a CEO and founder, as regular listeners will know, of a health tech company myself called PocDoc. We are revolutionizing the diagnostic space, delivering a step change increase in access by allowing anyone with a smartphone to test themselves for major diseases, starting with cardiovascular disease. We're currently rolling out across the NHS and through a partnership with Novartis, as well as across pharmacies all over the UK. So all very exciting times for PocDoc. PocDoc are a big supporter of putting the show on, so thank you to them. Also, thank you, as always, to everybody listening. So we're up at 60,000 people listening live to the show right now, going out across UK Health Radio. So thanks a lot to Johan and his amazing team at UK Health Radio. We've got well over 1,000 subscribers to the YouTube channel, and we've got thousands of people listening live across the podcast platforms. And we are now officially a 5-star rated podcast on Spotify. So thank you very much, everybody, for listening. So on to today's show. I think it will come as no surprise to everybody that we're in a little bit of a tough spot as far as the economy goes. I'm sure that's not news to anybody listening. There's a lot of negativity out there. There's a lot of financial pressures and things like that. And there's plenty of companies in all verticals, not just health technology, but we're a health tech show. So that are looking for capital, that are struggling for capital, all the while actually demand for health services, healthcare is obviously on the up. So on today's show, I think we've got a really interesting guest who's got a really interesting angle on the general macro trends that are going on in this space. And so we've got Christoph Ruedig, who is a partner at Albion VC, who are one of the leading venture capital firms in the UK that focuses specifically on early stage health technology, digital health companies like PocDoc, but we are not in the portfolio. But one of the people that is in the portfolio who's been on the Health Tech Hour more than once is Locum's Nest, who are absolutely crushing it as far as NHS staffing is concerned. And they're actually speaking to Ahmed. If you go back and you look either on Spotify or on YouTube, get the Ahmed Sharabani shows with Locum's Nest. They're absolutely fantastic and so topical, because literally the week that show came out, they announced a policy change that Ahmed had been talking about the week before, saying that this is what they should do. So go check it out. Anyway, Christoph, welcome to the show. How are you?
I'm all right. Thanks for having me, Steve, and well done on your fantastic show.
Thank you very much. So, as you know, the show, we kind of meander around a little bit. We've only ever had, you're the second ever VC, venture capitalist investor that we've had on the show. I think that it's an underserved category in terms of trying to explain generally about why you guys play such a critical role. Obviously, particularly, I would say, in health technology, given that there are much longer journeys between sort of inception. There's a heavily regulated space, as it should be, and so on and so forth. And so I'm actually really happy to get you on, talk about a whole bunch of different things. But let's start with, just for everyone listening, because we are a broad church, there's lots of different people that listen to the show. How would you define venture capital, and why do you think it exists?
Good question.
Why does it exist?
I haven't been asked that question in a long time, because it's such a big industry now. When I entered 15 years ago into the venture capital industry, I guess I would define venture capital as really as a form of financing. It's a part of the capital markets, the wider capital markets. And if you go back to sort of, I guess, microeconomics, right? There's two things you need. There's financial resources and sort of human resources, right? So people and money. And venture capital forms part of the money piece of the jigsaw. And venture capital really is one of the earliest stages of sort of capital. So, venture capital comes in to finance businesses when there's already something there. It's typically not a complete startup, just people with an idea. There's typically a product there, depending on what stage the venture capital fund operates in. It may be sort of earlier or later, but there's already something there, sort of a group of people and a bit of a product or something. And that's really where I think venture capital plays a really, really critical role, because in those situations, there's a lot of risk that you're taking as a capital provider, because the majority of investments of companies actually do ultimately fail, because, and that's just it's just how nature, works,
Yeah.
how humans, how our systems work, because the world is so complex. That you mentioned regulation earlier. There's also regulation, in particular in health tech, and so the venture capital funds take a lot of risk and therefore, demand a good return. But because of that risk, actually, a lot of the rest of the capital markets, so the big money that you hear about in the news, for example, Bank of England, they'll talk about bonds and these sort of things. They would never touch this because they're looking for, a guaranteed return almost, right? And venture capital is almost the opposite. They're looking for a guaranteed return, but not on every individual investment. In fact, a good venture capitalist, they go into an investment basically saying, well, it's likely that I'm going to lose all my money on this, but there will be one or two or maybe three in my vintage, in my portfolio, that will be successful, and they'll be wildly successful. And so I'll make 10, 20, 30 times my money. And that's how you then deliver the returns across the fund, and therefore can then continue to operate and raise funds yourself.
Right. And is there an issue whereby, because the fund exists, or the funds exist, that you've got money from other institutions or wealthy individuals, or however or successive previous funds that roll on? Are you this is a question I've always kind of been interested in, and I think that it's quite pertinent for today's market, which is there's no obligation necessarily on you guys to put money out into companies, or there is sometimes. So you could in theory hold on to it, which I think is one of the things that's being thrown around at the moment. Is it better to hold on to it, or is it better to invest it in companies, even though the economic situation might not necessarily be ideal and the companies may not necessarily be in as good a financial situation as you might want in a different kind of market?
Yeah, so let me answer this in two parts. I can explain a little bit how it works for the average sort of venture fund in terms of capital deployment and what the sort of cycles are. And then secondly, whether actually it's a good time to invest now or not. So on the first piece, the average venture fund, the way it works is that you raise money from larger financial institutions, and they may be pension funds, they may be endowments, they may be banks, they may be strategics, pharma companies, insurance companies. And the way it works is that you basically secure what's called commitments. Okay, so you don't get money onto a balance sheet. It's just a commitment from those institutions to fund you the moment you've found an investment and are basically calling down the capital. Okay, and that typically is so that, and that's all wrapped up in a fund structure, which is typically a sort of a limited partnership. So I won't go into the details there. And typically the investment period is a 5-year time period. So you can make new investments and call the capital from those institutions for a 5-year period. And then there's another 5-year period where it's sort of maturing, and then you exit the companies. And sometimes you add another 2 years, so it's a 12-year period. So between 10 to 12 years is alive. Okay. So that's how it sort of works. And a lot of funds have actually fundraised when the times were still good. So they're sitting on a lot of dry powder. And that dry powder is a commitment, okay, from these institutions that have committed to deploy that capital, and they're legally bound to deploy it, right? So if they were to pull out, that would be very, very painful for them. So the funds that have capital, that have raised capital or have raised those commitments, they're in a pretty good spot. And this is coming on to the second part now, which is now valuations are actually quite low.
Yeah.
So now is actually bizarrely a very good time to be making investments, certainly in the later stages. And we can come on to the difference between what's happening in the early stage funding market and the later stage funding market later. But at the moment, on a general level, prices are pretty attractive, and companies are still looking for financing. And so actually, for the ones that have a lot of cash or commitments, it's actually a very good time.
Well, I think it's super interesting. And I think that I've always felt that, particularly just in the general wider ecosystem or the general kind of wider population, there's a bit of a lack of understanding around how critical funding capital is to companies that start. There's a lot of talk I find, particularly from politicians, around innovation and fostering innovation. And, we're going to be a country of innovators and startups and all this sort of stuff. And it's like, it's all great. Like, I'm sure there's like tons of people with ideas, like tons of people want to have a crack. But as you say, it's like people and capital. And if you can't continue to provide large volumes of capital into the system, then it doesn't matter. I mean, the classic example is like Tesla, right? They were 7 days away from implosion, not because they didn't have a good product, but because he just couldn't get the capital together, which he evidently did, obviously. But I don't know what your thoughts are about that.
No, absolutely. This is something I've learned over a number of years, if not sort of decade, in venture capital, that the key risk these early stage companies have, even sort of later stage companies, is actually financing risk. Yeah. Because as you say, you may have a perfectly good product, but maybe your last 12 months has been sort of slightly tough, and you haven't grown as much as you before, and the dynamics aren't quite right. And if you then can't go and raise capital, you may end up not surviving because your investors aren't willing to continue to support you, and early stage companies are generally loss making. I mean, especially if you're talking about technology companies, and especially those which have what's called sort of deep technology, so where there's a lot of sort of investment required in
R&D heavy, right?
R&D heavy, exactly. So those are loss making until they typically reach several tens of millions, sometimes sort of hundreds of millions, right? So they do require a lot of capital, and so therefore having a functioning capital markets ecosystem is absolutely critical. But two, also to your point, having the right sort of regulatory environment, the sort of government, being supportive of that is absolutely critical.
Yeah, because you can't just have the government saying that they want innovation and then, we're going to come. I don't know if you saw what happened, what was announced with the R&D tax credit scheme. I don't know if you saw this.
I did. I did.
We can come on to that later because I want to talk about that. That's definitely causing a stir, I would say, in the kind of R&D intensive, but we can come on to that because I'm not sure necessarily R&D tax credits is like something that the general person on the street, maybe listening to the show, knows about, but it's absolutely critical. I tell you what, every single early stage health tech business knows what R&D tax credits are.
Absolutely.
What just on a personal level, what was your journey like into venture capital? Like, how did it come about? Why, what was the motivation?
Yeah, sure. So, I mean, I originally actually trained as a medical doctor. So,
cool. I didn't know that.
I did my sort of 6 years as a medical student. That's sort of the time you typically do it in Germany, which is where I'm from originally. And then I specialized in radiology and did that for about sort of 2 years. And then I sort of realized, look, you as a radiologist, you end up sitting mostly in the basement because especially the MRI machines are very, very heavy, so they have to ground floor level. And so you get into the hospital in the morning and it's dark, and you get out of the hospital in the evening and it's dark, and you kind of think, well, is that really what I'm? Well, I mean, this is slightly that's slightly it's actually not, it's not the full story. So there was sort of, I was already, when I was in sort of in the later stages of my university, so med school, I was already tinkering with, well, do I actually want to do this, or do I want to sort of go and look outside? And so I just had the urge to sort of see the outside world, I guess, a little bit. And so I joined a consulting firm called Bain & Company, and did healthcare consulting, management consulting for them for sort of roughly 3 years, which was super interesting. Learned tons, but wasn't ultimately also quite for me, because I just wanted to get something. I wanted to do something which had sort of more longer term impact. As a consultant, you sort of go in a couple of months, help the companies have real impact, but then you sort of go out and leave, and it's sort of fee for service type thing. And so that didn't really that I didn't find that sort of too attractive for me personally. And so I then I did an MBA, and then actually looked around with what else is out there. And actually I just sort of stumbled across venture capital almost by accident, because I was talking to a bunch of private equity funds. So this is in the sort of mid noughties, it was 2005, 2006, when venture capital was still a
pre-financial crisis.
Pre-financial crisis, everybody, all the bright MBA students were interested in either hedge funds or private equity. That was sexy at the time. Okay, venture capital was basically the ugly brother or sibling, and so I actually thought, look, this is really interesting, because it's combining the sort of, I guess, medical knowledge, the sort of technical knowledge that you built up over years and years of sort of med school, with, I guess, commerce and also sort of people skills. And I felt really attracted to it. And so I joined a firm called 3i in the UK, who at the time was actually, I think, one of the largest venture capital funds in Europe. I mean, 3i has a really sort of interesting history, which you could talk about for hours. Just that one.
What happened? What's the history?
Well, so I mean, they were originally set up after the Second World War as investment in industry, so 3I's, investments in industry, and then they changed the name to 3I, and it was private. So, and they basically just financed. They were the financing provider after the Second World War to a lot of businesses, which was needed. We had to rebuild after the Second World War. There was a Marshall Plan in Germany, which is now Kreditanstalt für Wiederaufbau, which is is also sort of a state-owned bank now, similar to BPC here or British Business Bank. But they were basically that sort of equity financier back then, and they were privatized then. I think one of the last privatizations of the Thatcher government in the 80s, and then they sort of morphed into other asset classes because they were listed on the stock market. So they added private equity, they added growth capital, they added other products, and so I joined towards the end of the original mission of this of 3i, which was venture capital. And then sadly I only witnessed 2 years because they decided to close it down because again this was the ugly sibling. The returns weren't very good. Venture capital was very difficult in those days because there wasn't a lot of venture capital around, so therefore there weren't a lot of entrepreneurs around, so therefore there weren't a lot of success stories around, so therefore you don't have the returns, and then you've got your sort of your sort of chicken and egg problem.
Yeah, your vicious cycle, right?
Or vicious cycle.
Yeah.
So anyway, cut a long story short. So I was there for 2 years, and then actually then the financial crisis hit, and it was just all mayhem. So I actually had a short stint at General Electric at their healthcare division, GE Healthcare. I was doing M&A really for primarily for their healthcare IT division. So unbeknownst to probably many of your listeners, GE Healthcare at the time and still today actually has a fairly sizable healthcare IT business, and that's mostly enterprise, enterprise hospital enterprise systems. And so I was just acquiring healthcare IT businesses across Europe really, and that's how I dipped my toe into digital health. And then in 2011, I joined Albion with a mandate to sort of help build their digital health or health tech investing, and so here we are.
And did Albion have much of a digital health footprint at that time, or were you sort of brought in to really supercharge it?
Not at the time. We had one investment at the time, but that was really it. And so a colleague of mine, Andrew Elder, and myself, who were the two health tech or healthcare people on the team, basically sat down and said we need to do something, and so we hashed out a strategy, and 11, 12 years later now, we've executed reasonably well on that strategy, I would hope.
Yeah, good. It seems so. So I think we're going to go for a break in a second. And then after that, I want to get back into just a little bit more around how you and Albion view health technology investments, just more conceptually, some of the things that you think, some of the trends that you have seen over the last 11 or 12 years, which I think really encapsulates the huge kind of growth, or really in the UK anyway, of digital health. That sort of, at least the first arc, if you view like this crash as the kind of the end of that arc, and then like hopefully there'll be another one, we all hope. But I think that's a really interesting sort of timeline to that you've worked across. And I know there's some great businesses, not just Locum's Nest, that you guys have invested in, but I think more widely, like your view around the health technology ecosystem. And I think trying to kind of, we always on the show, we like to try and make it relevant to the people listening, because obviously it's quite esoteric, right? This concept of investing and, cap tables and all this kind of stuff. Like, why does these things actually matter to patients? And I think ultimately they matter to patients because if patients need something, then there has to be somebody providing whatever that thing is, right? Whether it's a bandage or a plaster or an MRI scan or a lipid test or whatever it is, there has to be something that doesn't come out of nowhere. And if that something has to be funded. So anyway, we're going to take a break for 2 minutes and then we will be right back. Oh no, I'm getting told by my producer we are not ready for the break. We're good to go. All right. Okay. All right. Good. Well, we can come back to you after a couple of minutes. We'll be right back with Christoph Ruedig, who is a partner at Albion VC, one of the leading investment firms in early stage health tech businesses in the UK. We'll be right back.
Nagging pain. We at Alka Cells know that a small amount of the patient's own bone marrow and blood cells can treat many painful conditions with regenerative orthopedic therapy. This is an attractive treatment option for painful joints, back pain, sports injuries, and many other conditions. You may avoid the need for surgery altogether. Cells are the network of 15 Gen-X clinics worldwide, where over 60,000 patients have been treated at Cells. Life is more beautiful with less pain.
The cancer diagnosis can be scary and stressful for everyone involved. Love is a contemporary living space and well-being center in central London where anyone can come and learn about wellness prevention and non-toxic practice. Inside, you will find a vegan restaurant, juice bar, a holistic dojo that encourage lifestyle changes that help heal mind, body, and spirit connection. Cancer patients are offered free sessions. To find out more, please visit us at hellolove.org. That makes you feel good.
Hello and welcome back to the second part of this week's HealthTech Hour with me, Steve Roest, and our guest today, Christoph Ruedig, who is the partner of Albion VC, one of the leading VC venture capital firms that invest in early stage health technology companies in the UK and beyond. So, Christoph, before the break, we were just kind of covering your background and your journey into venture capital. So, like, after you joined Albion VC, how did you start to try and put together what type of health technology is interesting or worthwhile looking at? Because it's really varied, right? So like you've got everything from drugs, therapies, medical devices, right the way through to sort of, really soft apps that, and everything in between. So like, how did you start to try and triage that stuff?
Yeah, interesting question. And actually, just reflecting back on when I started, which, again, was 11 years ago, so 2011 here at Albion. And so, my colleague Andrew and I, we sort of sat down, and he's also an ex-consultant. So we did what any good consultant does, which is sort of come up with a market map and sort of map out what are the different sectors. And so the funny thing is, or the sort of, I guess the easy part was that the landscape was a lot less busy. There was a lot fewer companies and business models around than there are today. So in a way, actually, that task was a lot easier than it would be today if you sort of started fresh.
Right.
And so we very broadly split the landscape, and we still do to this day, into, we call this now digital pharma, and a little bit digital care. And then we did actually, not just sort of a desktop exercise, but we actually met quite a lot of people and talked to a lot of people. So, and that included entrepreneurs, ex-entrepreneurs that were, selling or trying to sell to providers, and in particular in the UK to the NHS, and also to the industry, which is, pharmaceutical industry, medtech industry. And the conclusion from that exercise was that it's really, and this is 11 years ago, so keep that in mind. But at the time, we concluded, just don't touch anything which tries to sell into the NHS, because it's just too difficult. And so we started really focusing on the digital pharma piece. So those are companies that have developed software platforms that sell into the pharmaceutical industry across the value chain, really. And back in the day, the sort of AI drug discovery, which used to be called sort of computational drug discovery way back when. That was an attempt earlier, actually, than that, 15 years ago, which completely failed. That didn't really exist. But what existed at the time was software solutions that sell into the clinical trial, so that from, after research, you've got a clinical trial, typically, which is involving patients, which many of the listeners may not now know how that works from COVID. These large clinical trials, and so there's software systems that support data capture and data analysis for that. So that piece, and then also there's a commercial piece in pharma, so it's helping pharma companies getting better at targeting, I guess, the right patients and targeting the right doctors. And that's how we started out. So we made a couple of investments in that sort of space, and then as the system, as the I guess the landscape, the ecosystem evolved, there were then more and more companies actually selling to, I guess, providers, so including the NHS, but also outside, in Germany, Switzerland, France, and such, that were starting to show traction. And so that's when and this was sort of roughly 2015, 2016, when we started investing in what we now call digital care. And a lot of these business models, actually, a lot of these companies have, services element to them, because fundamentally what you're selling if you're selling to providers or healthcare systems, you're selling a solution. If you're just selling a piece of kit, you're going to struggle to scale. So that's the sort of view we took. And so we've made a couple of investments in companies that focus on the high prevalence chronic conditions, and really trying to use technology to make care more enjoyable to the patient, but also more effective and more efficient and more cost effective.
And how did you think about like the regulations? I know that for like a lot of other, well, in COVID, because of COVID, there were a lot of sort of more general venture capitalist firms that didn't specialize in health that then kind of rushed after health a bit, you know, and I'm not necessarily certain that they understood the regulatory framework or the regulatory pathways or anything. And I think that there were some people that got a bit burnt doing that. So I guess with your background, were you kind of fully aware of those regulatory sort of issues and pathways and so forth? And you were investing in businesses that were in those pathways and on those pathways, or were you trying to sort of work with companies that didn't necessarily have those obstacles, like, for example, you know, apps that don't quite qualify as a medical device, for example, aren't regulated and things like that?
Yeah. So most of our business is just to sort of to preface this. Most of our businesses don't actually. There's regulations, but there's not the typical, marketing approval that is required, like you have for a, let's say class 3 or even class 2 medical device or a pharmaceutical drug. They are subject to regulations, and one, for example, being GDPR, which is, any company that deals with individuals' data is subject to that now. So there definitely are regulations, but most of the sort of health tech business, certainly the ones that we invest in, actually aren't subject to the same strict rules that you have for medtech and pharmaceuticals or biotechnology companies. But having said that, we have invested. Albion has invested. I actually, at 3i, have invested in medical device companies and also in pharmaceutical companies, and so we are aware of the rules and regulations. And I think where people that are not experienced in the sector have got burned was a little bit, I think, like everybody else got burned, from, I guess, through the sort of COVID pandemic and the boom, really, because in fact, actually what happened in terms of the regulatory landscape during COVID is that the regulators relaxed the rules significantly. It was a lot easier than for products to be marketed, I guess, or distributed or sold, because the regulators realized that actually, one, care needs to continue to be delivered, and if you're not allowed to see patients, then you've got to use technology. And whereas before, there were regulatory barriers, the regulators said, well, okay, let's make an exception now for a year, for 2 years. And so actually a lot of companies therefore were then able to go to market and sell, and actually, sell quite a lot and grow very, very strongly. And so a lot of venture capital funds looked at this and say, well, this is a fantastic growth profile. And by the way, we're in COVID. This is going to be, a massive market. And so you basically had a lot of money pouring in, a lot of companies being able to raise capital at really inflated valuations. And as the COVID restrictions have disappeared, that's gone into reverse. And then you overlay on top of that, I think, the issues you just have in the general economy with inflation, and what's happening. And so, there's been a very strong correction in some of the health technology companies. And I think, a couple of investors certainly feel that they've been burned along.
Yeah, there's been quite a bit of that. There's been a fair amount of that stuff in the press. And so, returning just to your comment about your original kind of investment thesis about staying away from anything that's sold into the NHS, which I think is an interesting statement. In the intervening period between then and now, do you feel how good a job? Because I also think this is something that people aren't necessarily aware of, which is like, first of all, the NHS isn't just one kind of entity, and there's lots of different entities within it, and I think how good a job would you say that they've done at trying to sort of adopt new innovations, new digital innovations? Because obviously, I imagine 12 years ago they weren't doing such a great job. But do you feel like that's shifted at all? And has your view on businesses that are NHS sort of involved / exposed changed?
Yeah, absolutely. So I think 11, 12 years ago, I don't know who of your listeners will remember that, but there was a big program, government initiated program called National Program for IT, NPFIT. And I think that was sort of set up. That was over 15 years ago now, I think, and that wasn't a success at all. They were basically trying to digitize the medical records in the hospitals, which was absolutely right to do. But I think the way this was done was probably suboptimal in that it was sort of top down. and force certain systems on certain regions. So all the hospitals in the region had to adopt a sort of certain system, and that that generally goes down. I mean, in any market, in any
it's not going to go down very well in us.
So it was a bit of a, and the problem with that was that everybody, all the trusts, the entire NHS sort of purchasing organizations were all focused on that, and so there wasn't any room for SMEs. And I think we were, I mean, it had already gone away. The NPFID, and hospitals at that time when we started were already free to secure their own vendors. But everybody now had a system, and there was still the sort of tail end of all of that. And so I think the mood was just very, very bad at the time. I think now, and we, so at Albion, we've invested in a couple of companies which are active and selling not just in the UK but also outside, in Europe, including Germany, including Switzerland, France, other sort of countries, and in the US. So we've got a pretty good sort of perspective of how the different countries are doing, and I know that people complain about the NHS all the time and how terrible they are at technology adoption, and I can tell you they're way ahead of the other European countries.
That's do you know what? That's a great statement. I love that, because I agree with you. People bash the NHS like you would not believe. Like it's like we need to do more and innovation, and so they're actually ahead. You feel like than people like in the German system, the French, the Swiss.
Yeah, no, they definitely are. They're definitely. I mean, I think the UK is actually the most digitized economy. I don't know if this is still true, but certainly last time I looked at the numbers, which is probably now 5 years ago. But if you just looked at online, shopping or retail, it was the most quote unquote penetrated market. Okay, so the proportion of online purchases versus offline purchases was higher indicated even than in the US. Okay, so
no way, really? Wow.
Yeah, this is a couple of years. So I don't know if those figures are still right, but tech adoption the UK is just inherently very, very good and very strong at tech adoption. Okay, so and then I think what you overlay that with a system in the NHS which has real capacity constraints. Okay, I mean the number of beds here per head is quite a lot lower than in most European countries. I mean, certainly Germany, where I'm from, I think the ratio is almost 3 to 1. They've got three times as many beds per 10,000.
Is that right? And is that because they have more space, like more land mass to actually put hospitals, or is that due to investment in hospitals, or what is that?
It's the latter. It's investment in hospitals, but it's also doctors. They've just invested, I think, more over the years in hospitals and in doctors. And I think
is that due to the German kind of, it's partially private, sort of, it's that insurer-based model, right? Is that because there's more financial investment from that, or it just happened to that it's hard to pin down why it just is that way?
It's a good question, actually. I've never sort of really thought about why specifically. I'd say, just shooting from the hip a little bit. So there's two. There are private hospitals in Germany, and yes, there's more of a sort of a private profit motive, and so therefore you could say, well, they're going to invest more. But if you look at some of the utilities here, actually, is that really true? I think a lot of the smaller hospitals are financed actually not through a sort of central budget, but a local budget. That's a big difference. So that they are, it's sort of the equivalent of the local authorities that fund the hospitals. And I think the local authorities in Germany are generally still, relatively well financed. It's all getting worse everywhere, by the way.
Sure.
But Germany also has they've got a current account surplus. They've run a current account surplus for the last 10 years because they export a lot. That probably is now going to change with China. So I think there are lots of reasons why, but fundamentally, the NHS, has its capacity. So they actually had to look at solutions as technology as a way out of those.
Yeah, I mean, we're a PocDoc. We're a huge beneficiary of that. I mean, and we're just one teeny tiny example. Locum's Nest, obviously,
there's another one. Exactly.
It's like that. Just cardiovascular disease is the single biggest killer in the UK. People kind of forgot that a little bit during COVID, and now obviously it's right back to the top of the agenda. But pathology labs are hugely backlogged. The gating factor for being put into a cardiovascular treatment pathway, whether it's to receive a statin or any other kind of treatment, is a 5-marker lipid panel. And so the ability to do that via smartphone with everything powered by the cloud, that you can digitally deliver the results, the health assessment, and then digitally deliver statins, a statin prescription, which is what we're working on, anywhere in the UK, at home or on the high street or anything like that. That came specifically, I mean, we're working across the private space as well, but from an NHS perspective, that came out of when we were on the Digital Health Accelerator. with the NHS, and also came like directly from the fact that they cannot test for lipids at the level that they want to.
Yeah,
they just can't. They just physically cannot do it because the system's so constrained.
Yeah, and that's fascinating because I think that what you just said is sort of part of our thesis of where healthcare is going to evolve or have to evolve into, and why shouldn't it, right? I mean, that's how you now.
Yeah,
shop,
like it's
right?
there's no. Why would it not? I mean, if it's the great thing about healthcare, which I love explaining to people, is that it's so organized and regulated, right? That you unless you're willing to completely go rogue, right? Just let's say, which obviously people do in any industry, you know, like Wirecard or whatever it is. I mean, people can go off the hook, right? You're dealing with generally a group of people that are absolutely dedicated to delivering a quality, safe product or service from the top of the system right the way down to the bottom. Like you're not dealing with people that are necessarily motivated by money or things like that. There's always a central mission generally with entrepreneurs or entrepreneurial people in this space that sort of transcends what the commercial thing is. You know, so like for us, it's about access to testing, whether it's cardiovascular disease or HbA1c or the work that we're doing, the Gates Foundation on polio, like that's our bag, but everyone else has their own thing. Like for example, Ahmed at Locum's Nest, I remember talking to him, and we can talk about that for a little bit because I love that company and I love what they've done. I mean, the thing that blew me away when he came on the show for the second time was this idea that you've got NHS Trust Oxfordshire, NHS Trust Buckinghamshire, right? Like next to each other, neighbours.
Yes.
But and you've got people that will work in the Oxfordshire Trust but live in Buckinghamshire and vice versa.
Yes.
But they can't actually switch between the two trusts. They can't take shifts at the two trusts. I thought he was winding me up when he said that. I was like, that can't be true. That just can't be true in this day and age, right?
Yeah. No, but that's the thing. I mean, there is, because, you know, to your point, because there's so much regulation, right? And there's just ways that people are used to working, which creates so much inefficiency, and where technology is just the answer, right? And you know, but even then, it still takes a lot of time. I mean, Ahmed, you know, he's you know, he absolutely runs a fantastic company. Of course, I'd say that is part of our portfolio, but he's done a fantastic job really trying to break that. And I think, you know, now they're quite successful in doing so, and they're really helping to address an efficiency problem which exists because you've got a highly regulated industry, and you know, and people working their ways and that sort of thing. So I think you're absolutely right. I think the technology really is the answer, and that's where the system has to develop. But going back to the why the NHS is more advanced in other countries, I mean certainly in Europe, is because of that, those supply constraints. Because if you've got overcapacity, none of this sort of surfaces really. But if you have undercapacity, it surfaces very, very quickly. Then all of a sudden you've got your queues in the A&E just lining up, and that is just something nobody really wants, right? Politicians not, and it's dreadful for patients and their health, and so. But that's why I think the NHS is much quicker at adopting technology, and by doing so, you're actually catapulting yourself into the future. Because hopefully at one point we'll be in a situation where actually capacity will match demand, or supply will match demand. But then we'll have actually a system and solutions which are really enjoyable, where you don't have to go to the doctors if you don't want to. You just basically get sent your test kits like you do.
Yeah, you do it, and it's all digitally integrated. All digital. And I think that there's obviously issues around health inequality that technology can address. Sometimes it creates health inequality, but that's a separate kind of downstream impact. Like if someone doesn't have a smartphone, what do they do? But I think there are ways to kind of adjust for that. And it shouldn't be that just we shouldn't miss progress for the sake of perfection, right? And I think that that's one thing that's really, really important. But no, I think that there's been a lot of instances. There's a couple of stories I want to kind of jump into after we stop for our next commercial break. The first is this NHS GP digital. I don't know if you saw the NHS digital thing where they're naming and shaming GP surgeries around waitlist times. Not sure you saw this story. I can go into it. I didn't see that. Absolutely. Well, we can get into it. I don't want to preempt it. And then the other one, this is a government initiative. This is not, and then the other one is the R&D tax credits. But I do think that to kind of round up this sort of part of it, I completely agree that the NHS, necessity is the mother of invention. And actually, what I've never heard from anyone in all my time working with the NHS is that there's no problem. right?
Yeah.
No one stood there being like, it's all good, it's fine, we don't need a solution. Like, no one's saying that. It's more around, you've got lots of people that are doing a very, very difficult job. It's overstretched system, huge demand, and they're just trying to figure out the best solutions that work for the most amount of people in a highly complex system with all kinds of downstream implications. If you change something here and like what happens there, it's like it's just not like anything else that you've worked with, unless you've worked with it and worked with those individuals. But like, I don't think anyone's saying it's all fine. You know what I mean? Like,
Totally
they've recognized there's issues.
Yeah, totally agree.
Yeah. Cool. Okay. Well, Christoph, we're going to be right back after the final break. Right back with Christoph Ruedig, who is partner at Albion VC, one of the leading VC companies in the UK that invest in early stage businesses, including HealthTech. We'll be right back for the final part of this week's HealthTech Hour.
Nagging pain. We at Alka-Cells know that a small amount of the patient's own bone marrow and blood cells can treat many painful conditions with regenerative orthopedic therapy. This is an attractive treatment option for painful joints, pain, sports injuries, and many other conditions. We may avoid even surgery altogether. Alka-Cells are the network of 50 Regenex clinics worldwide, where over 60,000 patients have been treated and helped. Alka-Cells. Life is more beautiful with less pain.
The cancer diagnosis can be scary and stressful for everyone involved. Hello Love is a contemporary living space and well-being center in central London where anyone can come and learn about illness prevention and non-toxic practice. Inside, you will find a vegan restaurant, juice bar, holistic dojo that encourage lifestyle changes that help heal mind, body, and spirit connection. Cancer patients are offered free sessions. To find out more, please visit us at hellolove.org. That makes you feel good.
Hello and welcome back to the last part of this week's HealthTech Hour with me, Steve Roest, and my guest this week, Christoph Ruedig, partner at Albion VC. So, Christoph, let's pick up on a couple of these news stories, and then I want to kind of finish up with your experience, because we get a lot of entrepreneurs listening to the show. And so I just want to finish up with kind of like everyone in health technology at the moment. I was at MedTech World last week. There's some bruised people out there, okay? There's some people who are a little bit bruised, a little bit battered, a little bit sensitive. So I want to try and kind of finish up on some, let's get people's tires pumped up, and you can give people some positivity about what it means to be a good entrepreneur, why it matters, why the world needs us, all that type of stuff.
Right.
But let's talk about, first of all, the world of R&D tax credits. So for the people that don't know what an R&D tax credit is, okay, for the very few of you listening that don't know what an R&D tax credit is, I'm sure, basically the government set up a program, I don't know how long ago, but it's been around for a really long time. I think 10 years, 15 years?
Yeah,
like
10
that.
years, something like that.
Yeah, 10 years. Which was basically that if you are an R&D, research and development, R&D innovative company, and there's some qualifying information, or you have to qualify for it. Like you can't just set yourself up and say that you're doing it. The government will give you a tax credit in return, a rebate in effect, if you're loss making, or a credit against your corporation tax if you're making a profit, based around the research and development costs that you incur. So the government basically said, we recognize that it costs a lot of money to, and there's a really long runway around R&D. We want to encourage and grow scientific, high technology businesses and encourage them to be here, engineering businesses, R&D businesses, science businesses. We want them to be based in the UK. We want to help them, and we want to help them continue to invest in R&D. So once you've got one product, we don't want them to stop. We want them to continue to invest in new products and keep coming out, right? So I guess that was the background, right? And so what they said was, you can apply for tax credits up to I think it's 130% of what you've spent back. So it was a really generous allowance. And for us at PocDoc, I remember when we got our first one, it was at the time a hugely meaningful check. It was 3 or 4 months runway, the equivalent of. I mean, for mind-blowingly life-changing for an early stage business to be able to have that back. And I remember in our first angel meetings, people were like, they were looking at our financial projections and they were like, you haven't put your R&D tax credits in there. They're like, no, you need to get it in because that's going to make a material impact to your runway at this stage because you're at angel stage. So there isn't a single entrepreneur who's founded a health tech business that doesn't know what an R&D tax credit is. So anyway, the news story that I want to get your view on is basically that Rishi Sunak is cutting them in half. He's reducing them in half as of next year. What are your thoughts?
Yeah, look, you can. I think if you take sort of the government's position, just looking, I guess, at the finances, the public finances, I mean, and I think Rishi Sunak said this, right? They're tough, and Jeremy Hunt said this. They're really tough decisions to be made, and and somewhere, they've got to take out the knife and sort of and make those cuts, right? Yeah. And it is the thing that I didn't sort of fully understand really, although I'm sure they have their reasons. But is that they were, in the same statement, budget statement, they were saying that they want to support, I guess, an innovation economy, an R&D economy, and then at the same time they're cutting the R&D tax credits, right? And so it's sort of, with one hand, the government giveth, with the other hand it taketh. It felt a little bit like that. But look, I really don't want to criticize the government for for what they're doing. I'm sure they have the best intentions, and again, it's a very, very difficult situation this country finds itself in at the moment, and
not just our country. I mean, it's consistent across. I mean, it's of course. I mean, it's not just us, right?
Of course, and I really do not want to be the Chancellor of the Exchequer at this particular point.
That's true.
Or the Prime Minister. I mean, I'm not a politician anyway, so I wouldn't go there. But even if I was, I think this is they're in a very, very difficult position. I think they're trying to balance the books, so they've got a lot of sort of demands from everywhere. I think what they may have done. And again, actually, I don't know the detail well enough, but I mean, what you may consider doing in a situation like that is to say, okay, fine, for the ones that actually need it less, so the later stage, more profitable companies, cut it entirely for them, and then for the earlier stage companies, leave that in place as much as you can. That may have been an approach.
Or like the inverse, right? Because they might say, well, if you're early stage, then giving you that back again, that might you might get out of business. However, if you're a going concern, one of these big companies that's already running, maybe actually will want to try and incentivize you to hire more people and to grow more or something like that. But you make it kind of sliding. I totally agree. I think just, I read the same statement and I was similarly confused because it wasn't like you're not just cutting it, but you're also saying that you want to be this kind of innovation economy and, sort of high technology growth country and sort of support science and life sciences and all that kind of stuff. So I just thought it was a little bit sort of contradictory, but I guess we'll have to see how it kind of comes out. I mean, obviously everyone understands the economic situation that we're in as a country. But, I think it's hard, right? Because you also don't want companies that only exist because they get R&D tax credits. Right?
Yeah, which I mean, I haven't seen in my career, to be honest.
No, I don't think it's easy.
I think that, as you said before, I think this is actually a very, very, very helpful means of financing. Or, I mean, effectively, what happens is you're not really sort of paying much PAYE for these employees and sort of other sort of social payments. So, and that is extremely helpful, as you say. I mean, almost all of our companies actually claim R&D tax credit, and it's a meaningful sum. It really is a meaningful sum. So this is, I mean, no doubt this is hurting, and there's been quite a sort of an outcry across the industry. Oh my God, what does that mean? And so I think it is definitely painful.
There's a joint letter, I think, going in at some point from various people in the industry, the great and the good, I think, including some venture capital companies have signed on to it about you guys need to have a little rethink. So I don't know. I mean, but they got to find it from somewhere. That's the other thing, right? Yep. Which is what you said. So it's hard. It's a very hard solution to crack. So the other thing I want to touch on, which it sounds like you hadn't heard about, but the government this week, the government implemented a policy whereby it would it's sort of mandated NHS Digital to publish the waiting list statistics for GP surgeries across the UK. So as in effectively a league table of how long you are waiting at any given GP surgery. And the goal that they said was to allow informed choice for patients to go to GP surgeries that have better in-person, percentage of appointments done in this period and so on and so forth. So the data came out this week. And I just didn't. I mean, it doesn't sound like you sort of knew about it. I think my view on the whole thing, just to get the kind of discussion going a little bit, was sort of like, I don't know if there's as much choice, consumer choice, if you like, if you treat a patient like a consumer in your GP surgery, as there is in well, for example, I don't like the service I get from my mobile phone provider, so I'm going to switch to a better deal. Like, I don't necessarily know if that thesis holds as true. But I don't know if you have a thought on that particular thing.
Well, I don't think. I think you're right. I don't think there is actually a lot of choice because, I mean, typically, I mean, certainly in some rural areas, I mean, there's a GP, surgery that you can sort of access, and you're on that list, and that's it, and there's little choice. I mean, I can see the sort of the sort of thinking behind this policy, because if you make it sort of public, that may cause some of the GP surgeries to maybe try to sort of work harder to remove to bring those wait lists down. So I think in practice, that's sort of assuming that the GPs, and the staff at these surgeries will work hard.
Yeah, right.
And they'll work hard, and they sort of twiddle their thumbs, and which is not at all the case. I mean, the thing we talked about the undercapacity in the system here. I mean, that is what it is. It is, you don't have enough doctors in this country, you don't have enough nurses in this country, and so and the staff in the NHS, the frontline staff, the doctors and the nurses, they're working incredibly hard.
Yeah, I know.
And actually the concern I have whenever I speak to a doctor, and I get quite a few calls these days now, but sort of doctors thinking about changing industry, going to venture capital, for examtle, and my first advice to them is, can you please stay in the healthcare system, because we need you, because you're in this sort of death spiral at the moment, because there's so much workload, and it's really so tough at the moment. I've got many friends who are doctors, and they're not very happy because there's so much pressure on them, because there isn't enough of them, and so they're waitlist, and then they get and you add the sort of naming and shaming on top of it. What is it going to do? I mean, it's just going to drive people out of the system. I worry, at least.
That was my reaction. It was sort of like, if you feel like publicizing lists, ranked lists of anything in any vertical, that generally is associated with sort of trying to say, well, these people are better than these people.
Yes,
sort of thing. That's the point, right? So I don't necessarily know if that's helpful at this point in time. I don't like to the point around earlier that this was driven by this sort of statement that I think there was like the media hype around no one can see a doctor quote, right? No one can physically see a doctor, which isn't quite the same way as being treated or being advised on anything or whatever, because actually you can do those digitally by the phone, all those different types of things. So I'm not sure necessarily setting an arbitrary target that I think they put arbitrary target of like 75 or 80% of appointments have to be face to face. Like I'm like, what's that based on? I just don't know what's that like. Is that a health outcome basis, or is what's that being driven by? I don't know.
I think it's all done with the best intentions, right? I mean, they are probably I imagine they look at average statistics and say, okay, the good practices, they have 75% or 80% of the appointments are sort of face to face. So that's what everybody needs to do. But to your point, I mean, that really depends on the patient, depends on the situation. Is it somebody who is who can use a mobile phone? If they're not, then they need to be seen, of course. And then I think the overall policy seems to be driven. I've done a bit of searching in the web in the commercial break. Seems to be driven by the fact that the A&E wait lists are so long. So people who can't see their GP, they end up in the A&E, and there's of course a massive problem. In the A&E, you have seriously sick patients who need to be seen, and so again, I think it's all done with the best intentions, but it's probably there will be collateral damage. There will be unintended consequences, effects that such a policy could entail. So I'm a little bit worried. I'd agree with you.
I'm with you. I think that everyone in the system seems to be working flat out, really, and I just fear that like it's not sustainable, and I don't know how like enjoyable it is if you're in that, and like if you're a sort of junior doctor or coming out of junior doctoring, and I mean it's a heck of a long stretch ahead of you, man. Like looking down the barrel of that, I mean, woof.
Yeah, it's tough. I completely agree.
Yeah.
It's tough. So we should thank them. We should thank all the all the frontline staff. I mean, they're doing such a fantastic job. So, kudos to all of them.
Yeah, thank you very much to all of those guys. So in the last few minutes of the show, let's just touch on a couple of things. So, like, what is it that gets you excited about working with entrepreneurs?
So I think the single most exciting thing, is the passion and the drive. There's just nothing like sitting in the room with, an entrepreneur who's got the sort of passion and the fire and who wants to improve, ultimately, to the earlier point, patients' lives and patient outcomes, because that is what health tech or healthcare generally is about. And just sitting in the room with somebody who's got a, fantastic idea, fantastic product that is sort of early, where you've got early proof points that it's working and it's being adopted and it is driving better outcomes. Patients are doing better. You're saving costs, and everybody's sort of, it's a win-win situation. There's nothing quite like that. I mean, and maybe this is also a personal thing for me because, as a former medic, patients are sort of front and center, but also, of course, the sort of happiness of the staff, as we just discussed, right? And if you can improve all these things with technology, it's just a fantastic thing. And it's that sort of drive and that fire that these entrepreneurs have, which is just something it's almost infectious. And I really enjoy that. I really enjoy that.
Good. And what would your advice be to anyone who's sort of currently out there at the moment, struggling a little bit or maybe kind of losing their little bit of motivation? What would you say to them?
Yeah, just hang in there. So I've now, as I said, so venture capital almost 15 years, and I've seen cycles before. The last one was, I guess, the financial crisis, and the COVID was a very unusual one, but the financial crisis is probably the more comparable sort of financial economic crisis, and it always comes back. It always comes back. It's just the way the economies behave. There are always cycles, and some are caused by external shocks, like this one. Some are sort of homemade, right? But ultimately, things will adjust, and there's a lot of firepower still, a lot of capital around there. That capital, a lot of that is just sitting and waiting at the moment, but it will. This is going back to the earlier discussion we had. The one thing that most of the fund managers won't do is return the capital to the institutional investors.
Yeah, right.
They're just waiting for the sort of right time for things to improve, and they will improve. So I think just hang in there. Make sure that you focus on your bottom line, that you buy yourself enough runway. You're not dependent on external investor if you can. I recognize a lot of companies aren't in that fortunate position, but if you can, try to preserve cash as much as you can. Go for the R&D tax credits, though it's a bit smaller now. Go for, try to be creative for financing solutions and that sort of thing. And then just try to sort of hang in there and focus on your bottom line.
Cool. Christoph Ruedig, thank you very much for coming on the show. Christoph Ruedig, partner at Albion VC, our guest on this week's HealthTech Hour. And thank you very much to everyone for listening. We'll be back again next week. Thank you.
Thank you.